Welcome. This is a follow-up video on the money market review for the 27th of February 2023, and this is Emmanuel Odogwu. So, while analyzing the market using market structural analysis and break of structure and shift of the market, which I explained, uh, we're able to use that analysis to place trade. And of this, a follow-up video of those trades we place and how they have played out. Okay, so these trades were placed in the morning by between 8 and 9, and of course now the time is just past 2 there, 2:49. That's to 3. So the trades have played out already, even though we enter with a small loss size 0.01, which we were expecting more retracement so that we can enter a bigger loss size. But then the market has moved in our direction, and of course we are seeing somewhat kind of manageable profit here, right? Call it manageable profit. Okay, so what is just going to be a short video because this is a follow-up of the main money market review, right? It's just a follow-up video. If you watch that, the money market review, the video is also on this channel. If you watch the video, please don't forget to like the video and to also give the video thumbs up, right? And also please try and subscribe so that when I upload more videos you will see. Okay, so if you watch the money market video, you will see that these trades were placed, right? This trade, the gold, the US 30 and the US 100. But remember, we analyze the US index first, right? If you can still remember, so you have to watch that video first. We analyze the US index first, and we say we predicted that after this break of structure on this 4 hours time frame, that is going to retrace, and that is exactly what is happening. Okay, so the dollar is retracing to the downside. That suggests that gold will push to the upside, and that is what gold is doing. The index will also push further to the upside. US 30, D30, they will move upward. Of course, that same thing is happening. Okay, now quickly excuse me. So we analyzed from the 4 hours time frame, and then we saw that on gold is already trading to the downside on the 4 hours time frame. We saw that gold was already trading to the downside, but it has already broken the structural low here, and after that break of structural low, all of this is called extension. So we're expecting a retracement to the upside, and that is what gold is doing right now. So expecting retracement to the upside, you can go down to a lower time frame, and then we use 15 minutes to look out for shift in character, right? Shift in character simply means we have a break of structure to the upside, right? A break of structure to the upside. That's what we did here. So you can see a push downward, a retracement upward, push downward. The next time it moves up, it went higher than this high. So it pushed downward again into this area. So this is the best area to enter the buy. But we came in late, so we entered from here, and of course it's already pushing upward, right? But remember, we are following the big money analysis. That's the H4 time frame. We're expecting this retracement. So quickly, same thing for US 30. We did the same thing. Okay, let's have US 30 here also. We did the same thing for US 30, right? As you can see, we entered from here and the market has pushed to the upside from our analysis. So we started from H4 time frame. So we saw that the market was already going down, but it has broken structure, and after breaking structure, the market is to do a little retracement to the upside. It is that retracement trade that we took like this, but we did take it on 4 hours. We went to 15 minutes lower time frame, right? So that we can look for a break, a shift in structure. Shift in structure simply means, as you can see, remember the market is going down. It's supposed to be giving us lower highs, but here we have a higher high. That's a shift in structure. Excuse me. We have a higher high here. That's a shift in structure. So you need movement to the downside and that's what happened here. It have to retrace again inside this area before you can excuse me, before you can enter before you can enter your trade. So this is the best place to have entered this trade, but we saw it late when we were doing analysis. The price was already here. Regardless, we still enter. Okay, we enter with a smaller loss side, expecting it to retrace further so that we can enter and place more trade. But it did not retrace from there, so they're going up. And of course, this is already good. It's already getting close to our take profit from here. You can see that the US 30 is already giving us profits here, right? So let's move to the US 100. So US 100 here, same thing. We analyze from the 4 hours time frame, right? So we saw that the market is going down because we already have a shift in structure here. So this is lower highs and lower lows, keep breaking structure to the downside, right? So this is where it has broken structure to the downside somewhere here, right? So after a break of structure, all of this is kind of extension, right? So we saw today that the market will retrace again. Okay, so it will retrace to a very good point before it will continue going down to continue the trend. That's what we said. So since we're expecting a retracement to the upside, we now go down to a lower time frame and we use 15 minutes to look out for a shift in character, right? And we saw one here. We saw the shift here. So we saw that this price pushes down from here, and it pushed up from here. As you can see, it pushed down again. That it gave us another leg. So see the first sign. The first sign, just like we said in the video, this low failed to go lower than this low, right? So that's the first sign. Then the next time it pushes up from there. Sorry. Next time it pushes up from there, came to this level, right? So these are just equal highs. That's a trick there. So it pushes down for you. So we want to see a high that will go above these two levels, right? So once we have a high that is above this level, it means there is now a shift. So this is the high. So there's now a shift in structure. So after you see that high, you wait for a little retracement. So this is the retracement. So this is the best place to have enter this area. Like we explained in that video, this area is the best place to have enter the buy, right? To take advantage of the 4 hours retracement to the upside. But we're analyzing, we saw the market here, so we entered here and we needed some retracement further, but it didn't give us. It's still going up. Of course, it's still good. We're still in good profits. So thank you very much for joining me on this short video clip. This one is just to explain. It's a follow-up video on the money market review. Okay, so after watching the main money market review, I think that one lasted for about 1 hour plus. So you can also just watch this one to see that we place the trade on that particular video, the money market review. Then this one is to follow up on what actually happened on the trade, which is the best thing to do. Anytime you place a trade, make sure you follow up to see what actually happens on the trade. All right, so instead of leaving my profit out entirely, I can protect my profit. This is just an addition. I can protect my profit by adjusting the stop loss, taking it from the risk zone into the profit zone. Okay, because once you have profit, you want to protect your profit, right? So, and that's what I've done here. So I also do same thing for US 30. Sorry. Do same thing for US 30. I'll take my stop loss into the profit zone, right? So this is how to have a risk-free trade. Everybody loves risk-free trade. All right, thank you very much. Remember, this is Emmanuel Odogwu, okay? And the channel is MRX Trade, so make sure you like and subscribe, okay? Thank you very much. See you on the next one. Bye for now.